create debtors. Okay. Yeah, so you then may be buying and then you don't pay immediately, so you create creditors and so on. Then you have cash and you need to manage that cash. And so you can see a business has a lot of activity going on, on a typical day or a typical month. Then what you would typically do, of course, is you would sell. So you then sell, and the activities that go with selling, and then hopefully you collect that cash, and then you restart the cycle all over again, and then continue. So that's what happens in a business. And as entrepreneurs, you probably already know that. But so while all that is happening, data is getting generated. So why do we need to know about financial planning and analysis? What's it really about? So in a broad sense, you put your strategy into numbers. So you have a big strategy like, let's say I want to have more guests. Let's say I have an Airbnb. I want to get more guests this year. So that's your strategy. And you've started some marketing activity to do with that. But do you know how many guests you had last year? Do you know how much they paid you? Do you know how much you're expecting from your activities? So that's where planning and analysis comes in. Because if you do not know where you are coming from, then how will you know where you are going? That's really what it helps you to support your strategy, the financial data. So financial data can give you insights to support or challenge other data or beliefs. This is what I mean by that. You may have a belief that most of your clients are big corporates, for instance. And then, sorry, there's some background noise. So you may have the belief that most of your most profitable clients are the corporate clients. Because when you say, maybe you're a catering business, when you deliver to them and they pay you a big check. But then if you had financial data and you started analyzing it, you may actually discover that serving corporate clients is actually very expensive. And then, so what do you do about it? So financial data gives you insight to either support or to challenge existing data or thoughts that you already have about your business. Then you can pick up trends. You may pick up trends. Let me give an example here. Let's say you're a newspaper, like we have some of the newspapers here in Kenya, and you're looking at your financial data in some level of granularity. You may find that your sales are starting, say for newspapers, are starting to go down. They're starting to go down. But you can't explain why, which is possibly what happened in Kenya maybe a couple of years back for the big newspapers. But if you're not looking at that data, you won't know until it's too late when you're firing people and all these things. So you identify trends from your financial data. This is all data that you have with you. Then you avoid surprises with your cash flow. So because you're keeping proper and you're analyzing proper records and you're analyzing these records, you're able to tell, okay, at this point in the month, I will not have cash. So I cannot commit to be paying this creditor at this time. I need to commit to pay them at this other time. So that's, again, one of the other benefits of doing financial planning and analysis. Then you may need to, you're wondering, you have maybe different lines of business and you're wondering, which one should I invest in more? Which one is giving me more profit, which is giving me more opportunities, and such kind of information. How do you know which one to throw in more money? Again, that can be seen. Some of those insights can be drawn from your own financial data. Even with others, you want other people to come on board and invest with you. How do you tell them that this is the business line that is making me more money? Let's say I'm selling cosmetics. Is it the soaps that are making me money? Is it the lotions? So that kind of conversation is what you will get from information that you're dealing with every single day. Then you understand your costs and what drives them. If they're going up, if they're going down, and why they're behaving the way they're behaving, right? So financial data is data like any other. like I mean, like you will see these days with online data, it kind of gives you insights, useful insights that help you make decisions. So the numbers are not your enemy. They are not to be left to your accountant to sort of figure out what to do with them or for just paying taxes. They are actually can be mined to give you insights. And this is what this masterclass is about. So let me just say that when you've probably had the term garbage in, garbage out. So if your data is mixed up with your personal data or your different businesses, all the data is mixed up in there and so on, you're not likely to get a lot of insights that will help you drive specific and targeted decisions, right? You're not likely to know even maybe what taxes you need to be paying because your data is sort of all over the place. You won't know when you need to change suppliers or source better because you don't know how your costs are behaving and where they're coming from and so on, because they're all over the place. They're all together. And we'll look at a detailed example so that you're able, it's something that you will go away and try and do it. Maybe you may not do it for your whole business, but you certainly can do it for one of your services or one of your products. Again, you need to keep records that are consistent categories. So again, let me go back to, let's say you're doing catering. If you've categorized contract salaries, you hire people on contract, and you have a category called contract salaries, then don't mix it up with the costs for buying meat and vegetables and so on. So have consistent categories, because then you are able to pull out that data quickly and it quickly gives you what is driving. You may be thinking that the most costly thing in my business is the employees. But if you do a good analysis, you might actually discover that the transportation is what is the most expensive thing, but you need to keep proper records. So garbage in, garbage out. Essentially, what I'm saying, you need to keep good records, which help you to draw these insights. If you're small, you're starting out, your business is, I don't know, maybe 50,000 a month or less, I would say keep those records on a spreadsheet like Excel, because Excel has many functionalities that can help you quickly draw out insights. If you're a bit bigger than that, you probably need a proper system, like Sage or QuickBooks or some of the others that are available. So let me start from the basics so that we are together on this. When I say I have made a sale, what exactly am I saying? Because I need to know what am I saying are my sales before I can, so that I can draw proper insights from that information. And when I record, I say sale, what am I exactly saying? So assuming you have whatever it is you're selling, you have a list price of 200 shillings. You would typically come up with your price, and you guys are entrepreneurs. You typically come up with your price based on so many factors, like what are other competitors pricing at, what was the cost of putting together whatever it is I'm selling, and so many other factors that go into pricing. So I'll not delve into that very much because again, I'm sure you're good at that. But your list price is your asking price. So this is the price before discounts. So assuming it's 200 shillings and you have a quantity of 100. So what you would typically call your gross sale, this is sales before any discount. It would be 20,000 shillings, Kenyan shillings. I'm talking shillings. If you're from another currency, just assume your own currency. Then you probably might give some discounts. Maybe some customers pay you quickly. You may give them what we call a cash discount, or some are buying large quantities or large amounts of your service. It's a service. Then you might give them a discount. So you take your gross sale and you deduct your discounts, and then you come up with your net sale. Yeah. So that's the money that you kind of expect for the business. But typically what an invoice will also have is it will also in there include an aspect of the VAT. If you're dealing in a vatable product. You may also, when we had, I think the turnover tax has now been stopped, but you may also have in there an aspect of the turnover tax. But now these two are not your money. They are money that will go directly to KRA. So it's not money for the business. So again, you can't keep it in the business wallet. Although in your debtors, so what the customer will pay you is that 21,080 shillings, right? But this amount is split between these three figures: the net sales, the VAT, the turnover tax. So you can see why it's important to keep clear records. So you will typically have this sale, the 18,000, sitting somewhere. Then, or well documented in your Excel spreadsheet if you're using Excel. Then you will have your VAT, because when at the end of the month, I think it's usually around the 9th, 20th, you need to pay up your VAT and then your turnover tax. Those need to be well documented. They may not be in different spreadsheets, but in the spreadsheet, they need to say, this is that, okay? So that is what we call a sale. So your debtors will be reading 21,000, but your sale will be only 18,000, and you know why, because you can come up together with that figure.
3773.
Sorry, there's some background noise. I think somebody has. So let me now show you how you're going to do your planning and analysis of the data that you've been generating in your business all along. So assuming you have three streams of businesses, or three revenue streams, you have a catering business, you also have an Airbnb business, you also have been running a YouTube channel, a YouTube cooking channel. So in 2021 quarter one, I'm assuming you have a January to December year, quarter one here meaning January to March. So January to March, your sales, and you remember how we've defined the sale, were 168,000 for catering, 110,000 for Airbnb, and 24,000 for your cooking channel. So are you doing well or are you doing badly? How would you know by just knowing that you made sales of 302,000? So this is where the planning and analysis comes in. So hopefully in December or before, you had told yourself, you had sat down and analyzed your business and said, actually, given that we're coming from a pandemic, and next year I expect the quarter one will change, and I will make sales for catering around 200,000. I will make Airbnb sales of about 300,000, and I will make some more income from, say, AdSense or other, in video promotion of about 80,000. So you kind of had some expectations, and those expectations total to 580,000 shillings. But you then tell yourself, okay, but how did I do in 2020, the same period? How did I do? Which is why I'm saying you have to have proper records. So you go back to your records and you discover, oh, from catering, I only did a sale of 50,000. And from the Airbnb, I actually did very well and did 200,000. And from the YouTube channel, 700,000. So you can see these total figures here. So I have 2021, I have 302 against what I had hoped for, which is 580,000. And against last year, which should have been a worse year, I made 320,000. Now, the question is, what can I learn from these total figures? Maybe not very much. Not very much, because they are all together, which is why I'm saying you need to have your, if you're recording your sale, say I'm saying I got this sale from catering, and this one I got from Airbnb, and this one I got from YouTube channel, which then helps you to know, okay, this is where the money is coming through from. That's number one. Number two, okay, I had anticipated to make 200,000 this year in quarter one from catering, but that didn't happen. What exactly happened? What went wrong or what went right? Then I can say, well, we had new lockdowns, so I couldn't do what I wanted to do. But when I compare that same information to last year, I say to myself, oh, last year I made 50,000 only. There were still lockdowns. but this year I have improved. What has changed? Or in my analysis, now I'm in the analysis bit, I then say, oh, during that quarter, we discovered that we can actually do some home deliveries of food, for instance. So then you figure, okay, there seems to be an opportunity, or there seems to be growth that is coming in the catering business that is being led by home deliveries. So that's an insight. So once you get the insight, then the question is, so what? So what? Okay, so do we continue to invest in home deliveries? How do we make it better? So it then informs your strategy, which is to say, do we then now, send out more flyers, partner with a delivery firm like Glovo or one of the others? So your strategy, you can see how your numbers that are with you are leading you to new insights, and then they're leading you to have what we call action or a strategy going forward. So again, you look at your Airbnb business, you say, okay, we didn't do too well against what we had anticipated because of the continued COVID situation. And then you say, well, we even did worse compared to last year. And then we say, well, is the situation going to change maybe in the coming few months? Then you say, maybe not. Maybe what I need to do is maybe I need to put a pause on that business. So that again informs your strategy. What's your strategy going forward for 2021 for the Airbnb business? It could be I pause this. So that could be the strategy, and so on. So when you look at your data, if you say you're making sales and you just look at them in total, even if you're just selling one product, it's important to have more granular detail. So if I make sales online, I'm making sales offline. What channels am I selling to? Am I selling to which, even if I'm doing online, where are those clients mainly coming from? Is it from Facebook? Is it from WhatsApp? The more granular detail you keep of your data, the better, because then you're able to tell going forward, how do I activate or stop activating some specific channels? So for instance, if let's say all you sell is organic soap, then you've been doing all your advertising on Instagram, on WhatsApp, and on Facebook. And then you've seen a lot of the activity. Most of the clients who are reaching out to you are coming to you through Instagram. Then going forward, maybe I need to really activate my Instagram, or is it that I'm not doing it well on WhatsApp or Facebook? So all these things is data you already have. You've tried out a strategy, it has kind of worked. Now I've come back, you've analyzed it, and now it's telling you something. It's telling you something. And it's the same with costs. So costs will come up from, again, from our catering business example. If I say in 2021, what I've incurred in 2021, I've paid a chef salary of 20,000, I paid some temps of 10,000, and so on, and I incurred total cost of 84,000. But when I compare that with what I had planned, it's almost the same, even though, remember, my sales are very different from one another. What has happened is because I have maybe a lot of fixed costs, like a chef. I hired a chef. Last year I didn't have a chef. This year I have a chef. So again, what do I need to do about that aspect? Do I keep the chef? Do I not keep the chef? And this can only happen when your data is organized in a particular way, and that you're reviewing it regularly. Now, regularly may be different for different businesses. If you're a very quick business, maybe weekly might be what you want to look at. If you're a long-term, slow business, you sell maybe one asset per quarter, maybe you want to look at that after some time. So it's really dependent on the business. But I'm saying keep your costs and keep all your costs. So and keep them separately. So don't fail to allocate the costs to where they belong. And so that you're able to properly identify the right trends for each of your businesses. So we are all familiar with the fact that what a profit is. A profit is when your sale is above your cost. And then of course the loss is the other way around. So your profit is your sale and less your cost. Now you've analyzed your sales, you've analyzed your costs. Then you come back and say, okay, so which line is giving me profit, right? So you have your costs, your sales, you have your cost, all in good orderly fashion, and now you have your profits. So you come and say, okay, I can see a lot of my profit is coming from my catering business. But was that the case last year? No, last year my most profit was coming from my Airbnb business. What is happening? The insights you got from sales, the insights you got from costs, they will inform you what is actually happening with your profit. And then what strategy should you take? Because all these businesses may not actually have the same profit margins. Some may be better and others. Some may sell low and have better margins. Some may sell high and have low margins. What I call moving huge cash in business. Sometimes you move a big amount of cash, you get a lot of sale, and then you get a lot of cost and get very little profit. Is that how you want to go forward? Is that the strategy you want to keep going forward? So again, having a detailed analysis of your profits per the business, or per the line or per the product, will help you get insights and then determine what to do next. So you need to, so depending on the cycle of your business, you will quickly tell this line is declining, this one is growing, so what do we do, and so on. So let me see whether anybody has any questions so far. Somebody saying my most profitable product that I'm selling is body mists. At the moment, my sales are at 50% online and 50% physical shop. Great. That shows you have insight. So once you know that, then you ask yourself, so what? So what? The insight, you have the insight. So what? Do I grow my online business? What is the cost to serve your physical business? What is the cost to serve your online business? What is variance versus LY? That is last year, sorry. That is last year or prior year. You will look at your variances and say, this is what I had anticipated to sell. So that is the variance to my budget or my plan. Then this is what is my variance to last year. So is it growing? Is it declining? So the most important thing to do with your insight is the so what. So what? Actually, in big companies, what the general manager would look at is the insights. They don't generate the numbers. The numbers are generated by the finance people, but the insight is what they use to then challenge the marketing plans, challenge the sales plans, challenge the distribution plans. So you can see how big business does it. As you were told, I work for a multinational. So that's exactly what happens in a multinational. You know the general manager looks at this data, looks at the marketing data, looks at all these things, and you quickly change course. And you might see suddenly, let's run a promotion on this, let's do this. And all that they've just gotten by looking at their data, most of which they may be holding internally. So far, I hope we are tracking along. So we have talked about our profit, and so we all understand what profit is. So profit is not cash. It can be, depending on what you're talking about, but it typically is not. What is cash is money that you have received from selling, less the money that you have paid out. So cash flow is really, you receive your money from your sales, and then you pay out. How that money is flowing at different points of that river called the cash flow. Because you may have a season where all your suppliers need money, and then all the money is held up by debtors. So your cash is not flowing. It's there, it's held up, but it's not flowing the way it should. So that's what cash flow is about. So what is how is money moving through the business? When you hear the term cash flow, and that's why I put a picture of a river. That's how money is moving through. It's coming in and going out. And some of the things that are important to note, and many businesses, big businesses, fail, not mainly for lack of profit, but mainly for lack of cash. So cash, as you've heard say in some quarters, is king. When you don't manage your cash properly, you can ground to a halt very quickly, or you can go into huge debt very quickly. So let's look at money in. For you to be, thrifty, or very good with your business, you need to get paid on time. If you're doing your business and you're doing business that has you give credit, you want to make sure that you're paid quickly. So again, arrange your terms so that they're favorable to your type of business. Of course, taking into account all other aspects of the marketplace. So get paid on time. Get paid on time. Sell directly to retail. Now, retail here meaning sell to consumers directly. So for those of you who already do like online business, you typically maybe have somebody pay you by M-Pesa or by PayPal or some other way, and that money is available to you immediately, which is great. Now, it may be small because you're targeting individual consumers. Sometimes you want to go to big players in the market, so you probably want to work through some specific channels like wholesalers. Those will typically ask for terms, some credit terms in their favor. So at that point, you want to negotiate the term with your customer, who will be typically a wholesaler. So you want to tell them, pay me in 15 days after invoice, rather than pay me after, they will probably ask for 30 days or 60 days. So again, how you negotiate with your clients so that they pay you quickly, depending on what channels you decide to go for. Again, when you make a sale, that's not the end. Collecting the money is king. So collect what is due. I think we've seen big companies go down with supplier money. So I can give an example like Nakumatt, which was a formidable company, and went down with so many people's money. Now collect. Collecting sometimes can be a bit of a challenge, but make those calls. Make sure that you are doing the work of collecting. A sale is not complete until you collect. Sometimes you may have account issues with your clients, especially where they are offline clients, maybe not so much online. Offline clients like wholesalers, retail shops, and so on, will typically, sometimes you invoice them, your salesperson or yourself had promised a discount, it doesn't appear on the invoice, so they don't pay you. They're not refusing to pay you because they don't have money, they're refusing to pay you because there's an issue with the invoice. So make sure those are sorted quickly. And maybe you're not there yet now, but when you get there, these things still apply. They still apply. So you can't pay people without cash. So you need to manage how your cash comes in. You need to manage how your cash comes in, which is typically through your sales process. Then you need to manage how your money goes out. And typically you will pay out to vendors, who have supplied you services or products. So you need to manage how your money goes out. Typically, your vendors may also require you to pay them within a particular time frame. For you to ensure you have better cash flows, you want to make sure that whatever those days are, they are favorable to you compared to the ones you're giving out, so that you create a flow of money within your business. So your vendors, ask them to extend, to allow you to pay them after 60 days. Your debtors, ask them to pay quickly after 15 days. These things, usually big companies can take in a bit of muscle on how much they can allow leeway between the two. But when you're small, you really want to make sure that the people are paying you quicker than you're paying others, if you're having people who give you credit. So the other thing is pay as agreed. You want to keep your relationships good. so that you can negotiate for better terms with your suppliers, with your vendors. Pay with even your employees. You want them to stick around and not leave you. You want to pay them on time when that is due. Avoid interest and penalties. So when you pay on time, that ensures that you avoid interest and penalties. And like we've all seen in the news lately, pay your taxes and pay them on time. That will avoid you a lot of grief whenever the tax authorities do catch up with you. I want to say that when you have your excess cash, so sometimes, especially when you have a very profitable product that you're selling, again, you'll only know this once you have kept good records and that you're tracking your cash flow, nicely. So what typically will happen, you'll have money coming in. Let's say you have 100,000 coming in, but maybe that month you only need to pay 10,000 out. So you have another 90,000 just lying around in your M-Pesa or in your bank account or wherever you're keeping your money. The best thing to do is to put away that money until you will need it. Put it away, reinvest it in your business. If your business is profitable, you're probably the best person to invest with. So invest. Again, because you've analyzed your business, you know which area you want to revamp. Maybe you want to do your marketing better. Maybe you want to buy maybe a few ad spots on some of these online spots, online places, and so on. So again, invest in your business with that excess cash. Again, if you don't have anything that you're currently doing with the money, don't keep it lying around. Take it out, put it in some of the money markets. You will get a little bit of return as you wait to see what to do with the money. So invest your money. Now, if you're looking for funding, and maybe you're having shortage in your cash or you're starting up or whatever, the best thing is to look for cheap funding. And some of this cheap funding is government programs, youth, women funds. Some NGOs are supporting some causes. So look for them, whatever industry you are in, look for those opportunities and get their money rather than going for expensive options like mobile loans. So mobile loans charge very high interest. They are quick, they are easy, but they will make, when you do your costing for your product, it will be quite expensive because you will charge that interest to your product. And if somebody else is not borrowing, their product is cheaper, which means you will have a difficulty competing in the market if you're operating in the same market segment. So consider how you're funding your business. So that's cash flow. That's cash flow. Now I want a little bit about what we call controls. Controls, and I've put a padlock there, really, because in the finance world, we call them controls. But what they are, they are padlocks or some hedge around. You've worked so hard, you have earned all these profits, you have earned all this money, or you've come up with some products that are unique. Do not let them sort of disappear into thin air by not having controls. So controls ensure that your hard work does not disappear with others, and we'll talk a little bit about that. You need both financial and non-financial controls. For instance, if you have a unique design or trademark or music or whatever it is you have done, that is not necessarily financial. It's non-financial, but you need controls over it because that is the thing that you're selling. That is the thing that you're selling. Financial is to do with the money that you have earned from that thing, whether it's a service or a product. So you want to make sure that the money that you're getting from those activities does not go into thin air. And I've explained that in that. So let me talk a little bit about what financial controls are, because I've heard and I've worked in finance for many years. I've seen fraud, I've heard of frauds, and this is just to help you as business owners. It's not financial planning per se, it will happen together, but it is useful because you may plan all you plan, but if the money you work so hard for disappears into thin air, then we will not have done justice. So financial controls are essential to avoid fraud and assure integrity of your accounting information. And how you do this is number one, keep your transaction documents. So you have bought a camera, keep that receipt, put it somewhere in a place that ideally is safe. Keep those documentation. Keep records. So that's what I've been saying. In Excel or in whatever system you're using, keep records. Make sure that if money leaves, there is a document that showed that money left, which is the receipt. The document says the camera receipt. And then there is a record that says that money left. And now, instead of the money, what we have is the camera. So we had money initially. Now all we have is a camera, and that's represented by a document called the receipt. And the other one is a record somewhere, hopefully not just in a book, just to enable us to make analysis later. Reconcile. So for instance, let's say we sold 100,000 today. And during the day, we also paid for rent, and we paid for employees, all of which came to say 40,000. So ideally we should be having 60,000. But when we look at what we have on M-Pesa, bank, and everywhere, we actually do not have that money. We have 40,000 instead of 60,000. That is what I'm calling reconciling, because you're asking yourself, I should be having 60,000, but now I have 40,000. What happened? Then you go back. When you're retracing back your steps, you may discover, oh no, we didn't record this particular transaction. So that gives the integrity to your financial records, because your financial records were not complete, now they're complete. So we paid for something. Or you may, as you go back, you may discover, oh, I was supposed to collect some money from somebody, which I didn't. I thought I'd collected it, but I didn't. So again, that transaction was not complete. So that is what reconciling in a very basic way, and anyone can do it. Typically, you do it in your daily life. Of course, for big organization, it's a bit more complex, but that is exactly what it is. You're trying to trace what happened with that transaction, and does it make any sense? Or maybe you have the vendor is saying, pay me 60,000. But as far as you know, the goods that came to you were for 40,000. Why are we having a discrepancy between us? Then the vendor might say, I sent goods for this, or I didn't send goods for this. So that kind of reconciliation is what helps you to know whether you have things are getting lost. Things are getting lost in the process. So don't just you kind of have to come back to the transaction or to the transaction and ask yourself, are they complete, or is there a sieve somewhere where things are falling through? If you have more than one person doing your business, typically you will need to separate what everybody does. For instance, let's say you have people selling for you. Like I've seen some people, they give products to people and they need to go and take it around selling. How do you ensure that what you gave them to sell and the money they bring are together? So number one, you could every evening do an inventory count. I gave you 5 items and I expected X money, and have you brought it? Then you say, okay, they reconcile. Or you could say, whatever you sell, let it be paid for by, I don't know, a pay bill. And all you're doing is saying, looking at what has come through pay bill and comparing with the closing stock of the individual. For instance, you give them 100 items, they have 50 items, I have money for 50 items. So that is good. That is working as it should. And that's one control. It doesn't have to be like that. Everybody would come up with their own control to say, how do I ensure that if I'm selling something for 100 shillings, that it doesn't end up being sold for 120. And one control is just very simple. It could be that the item is marked 100 shillings, or that the person is a good hire, that when you hire, you take care of how you're hiring so that there is high integrity in your employees. So controls are things you might think are usual and just, things that you go about every day. but they help you to be able to keep your money without losing it, If you're using a system, there must be system controls. And this is where most entrepreneurs, I think, don't get lost. So to you, it just allows a lot of activities to happen in it. If let's say you have one employee, so the one employee is the same one who is selling, is collecting money, is collecting all these things. Now that is what we call lack of separation, and the lack of separation can happen, offline, but it can also happen online. So if you have one person who posts an invoice, then it's the same one who generates the payment. So the day they decide to pay themselves, it's difficult to tell. So again, don't lose money. And then don't be over trusting. I would say this, take your time to recruit people and also monitor people as they are working for you. Most people, after you've done a business for some time, then you really over trust an individual. And that's where things go wrong, because people get tempted. People have needs, they get tempted, they try something, it works, and then it keeps working. I know a friend who told me she lost millions of shillings. She runs an SME. She lost millions of shillings just from a very trusted employee. So don't overtrust. Check, trust but check, create authorization, especially if you are working, not just you, but there is somebody else. So create limitations as to when you need to buy, you need me to sign. When you need to this kind of engagement, if you're committing to this level of credit terms, I need to sign. Those kind of engagements. So creating a little bit of structure in your business. Then analysis, we had talked about earlier. Analyze your data. A lot of information can actually come through by just analyzing. You might see the sales this year have really dipped. What happened? And then maybe your salespeople or your call people tell you, oh no, there's a competitor that has come up and so on. But then when you look at your costs, then when you try to interrogate a little bit, then you discover we are paying the same level we used to pay last year. We're still paying out. So what has gone wrong? Sales have come down, but the inputs are still the same. So somebody must be, creating ghost inputs into the system. So an analysis helps you to pick out anything that may sort of not be working. Then audits. If you are any size, maybe a little bit bigger of a size, you can engage an auditor to carry out audits in your systems, in your books, and give you audited accounts. Which help in many ways, helps with your taxes, helps with investors, helps you to create controls in your business. Let me look at some of the questions that have come in. What's the difference between liquidity and cash flow? So liquidity means it's almost the same. As you can tell, they're both referring almost to water. So liquidity is that you have money to meet your obligations. Cash flow is how the money is coming in and going out. Yeah. So liquidity is that if you tell someone they are liquid, you're telling them they have money to meet their obligations. Where they got that money is not in question at that point. Cash flow is when am I getting my money? When am I paying it out? And you can create a plan for yourself, even for your own personal finance. You can say, I receive my dividends every 15th of the month, but I have obligations on the 1st of the month. How do I make sure that I pay them out? Yeah, and then Pat has said that a sale is not complete till payment is received, and that's true. So again, let me try and get this scrolling going. So let me talk a little bit about as business people and about financial numbers. We've talked a bit about controls. I now want to deal on aspects about risks. Now you're running your business. You've been making some sales. you've been making some inputs and so on, and that has been going on well. So far, you've started maybe even to look at some of your numbers, which is good, and you're reinvigorating your own strategy. Now, the reality of business, all businesses face risk. All of them, they face risk, some measure of risk, some more than others. Some risks are general and some risks are very specific. So for instance, like when there are political elections in a particular area or in the whole country, political risks keep kicking for all businesses. Economic risks are there, like now we have, a dampened economic environment. So what is happening, there's an economic risk on everyone. And so on COVID, it's an economic impact on everyone. Some are specific to your business, to your industry. Some risks are only specific to your business. So you may have changing customer trends, like I gave you examples of newspapers. So that's specific to those people who do print. They are selling magazines, they are selling newspapers. What are the risks? Changing customer trends. People want to read their news online as opposed to handling paper. Or there could be new government regulations that affect your area. For instance, there were new regulations about Airbnb businesses. If you're running an Airbnb business, you're now required to register with, I think it's the tourism board, and there are charges to it. That is a risk to you. So government regulations, environment, and so many other areas that would be specific to you. And you as the business owner, you're actually the best person, you and your team, to know which risks face your business. Now, I have seen businesses that, because they don't anticipate any risk, they operate with a very positive mindset, which is good. Because they don't anticipate them, when those risks do manifest, then they completely wipe them out, completely. And some of them could be, there could be risks of that your debtors won't pay you, or there could be risks of the raw material that you are using is no longer available, or there could be risks of that where you are located. Let's say you have a restaurant where you're located, your lease is coming up to an end. Those are risks that are unique to a business. Now, what I want to say about risk is that you need to know them. You need to know at least a few of the major risks that affect your business, because you may be projecting budgets or some plans in the future that are not realistic. And without knowing your risks, you will overdo your budgets or your plans, right? So know the things you're saying you're going to do next year or next quarter. I'm going to sell 300,000. What's the risk to that number? If there's going to be another lockdown and you are running an Airbnb, it's going to affect your business. If the economic situation continues the way it is, it's going to affect your business. And the main question to ask after knowing the risk is, so what? So what? So what? So what that banks won't lend? So what if my lease is coming to an end? So what? So what is what we call the risk mitigation. Risk mitigation. You then come up with a mitigation to that risk. You've anticipated the risk and you mitigate it. So I would say enumerate your risks and create mitigation options for that. Another good thing that and also helps with controls is about policies. Policies. Now, policies is about how do you do whatever you do in your business. Now, if you're a small business, maybe you only probably need a policy of how you came up with your product. For instance, let's say you've come up with an organic soap. How did you come up with it? What's that process of coming up with that soap? So you probably need a policy to that. But if you're a slightly bigger, is how do you recruit? How do you enter into credit terms? How do you how many bank accounts should you have? And so on. As you're growing, you will experience that you need to define how your business is run in almost all ways. And why is that important? You will ensure that your business is run the same way. If you get an employee tomorrow, you just give them the policy, You tell them to read and ask questions where they're not where they've not understood. It also shows other people, outsiders, that your business is well run because it's well documented. So policies and all controls ideally should be documented. For instance, if you say salespeople can only receive cash through the pay bill number, that needs to be somewhere. Assuming the employee goes ahead and receives cash instead of the pay bill number, what are you going to do to them? There is nowhere where they signed that they agreed to those terms. Then you probably will fire them and that's the end. But maybe in some cases you may need to pursue it further. And the way to do that is by showing that they signed up to that policy. So that's why policies are important. They help with culture. They help with stability of the business, especially when there are many changes going on. It ensures that things are stable. People are not, because the business is growing too quickly, people are not going off and doing crazy things. That there are policies that run. Not that they are static. Policies are things that you keep renewing, but they help your business to run smoothly and to grow to the next level, So I have talked so many things, hoping that you've been able to follow. So what exactly am I saying through this conversation? I'm saying know your business numbers. Know your business in numbers. So move your strategy or what you know about your business, let it be represented in hardcore numbers in Kenyan shillings. This will help you to make timely and strategic decisions. It does for big companies. It will help you even when you have just all you have is a small Excel spreadsheet. Keep proper records. So all I'm saying is whatever you do, or as far as your business is concerned, record it well. If you've made a sale to a wholesale, what is there? So you say, I have sold 18,000 shillings of organic soap to summer wholesalers on this particular date, and they are a wholesaler. If tomorrow you sell to Purity and you sell via M-Pesa online through, I don't know, contact coming through WhatsApp, record that, because that then will help you to know, okay, I can see most of my clients are coming from here, or this is the cost to serve. Cost to serve means whenever I have to deliver to my online clients, I need to get a motorbike to deliver, and so on. I need to make calls to make sure that the product has reached that whole cost. How does that compare to when I sell to the wholesaler, who I just take all the products, I put them in a pickup and deliver? How does that compare for the same volume of sale? That's what I mean. Keep proper, detailed financial data. Overall, what I am saying is that financial data is like any other data. We are living in the data world right now. Why we have all these apps for free, Facebook, Google, whatever, is because they are tracking our activity, because they can use that data to make sales. I mean, they're seeing, oh, Purity searched on organic facials. Then they sell me adverts. You say, immediately I see adverts for organic stuff. And they charge you for that. They tell you, we can advertise to Purity, but pay us a little. So what are they doing? They're just using data. They're using data. And I'm just saying financial data is like any other data. It can help you get insights. I've also said it's pointless to work so hard and then lose what you have worked for. Create controls in your business, both financial and non-financial controls in your business. And it will ensure that you do not lose your money, whether you're small, whether you're big. It's something you need to have somewhere in the back of your mind. Then you need to keep your documents. Keep your documents. You will need them if you need to make a case for your taxes. There was just a case that was decided, I think, just this week, where a particular business, KRA came and said they owe this amount of money. They disputed the money. KRA kept telling them, produce the documents that you do not owe this kind of money. And then the case went to the Court of Appeal, I think. And then the judge ruled that these guys are not able to make a case for themselves because they have nothing. They have no documents to prove otherwise. So keep your documents, keep your documents. I think for most taxation and all those kind of things, you need to keep at least 7 to 10 years for your documentation. So do that and try as much as possible to pay your taxes on time. You need to be aware of the risks facing your business because even if you're growing, you can grow too fast for the capacity that you have. So even if you're growing very fast and the demand is really coming in, in torrents, that in itself can present a risk. Because then you start dropping on your customer care, you start dropping on your deliveries, on your promises, and your loyal clients abandon you because you've grown too fast. You're not able to meet. You're not able to grow together with your existing clients. So put down your risks and create mitigation, at least 2 or 3 risks to your business. Then look for mitigation. If you're big, you're somewhat sizable business, you probably want to look at a bit more. Then have key policies for your business. Have key policies for your business. Let me see. Somebody has said I shared the link. Somebody is asking, what is the journey for establishing these systems and controls as a startup? And how do you grow from lumped up financial data to well-organized structure that you have described? I would say start today. Today. So your other data is sitting mumbo jumbled somewhere. Okay, that's fine. Maybe if you have time, you can go back and dig it a bit. Today, start keeping your data in a very simple fashion. So, and I would say it's not very different from your own personal finance, like I said. Let's say, like I said, the example of the camera. I bought a camera to start doing video shoots for my online cooking business. So I come with my receipt, put that document somewhere safely, and I record. Today, I have bought a camera worth 10,000 shillings. So I write the date. This is on Excel. I've written the date, what the item is a camera, how did I pay? If for instance, you have a VAT registered person, isolate what is VAT and what is the real cost of the item. Just 2 columns. One is VAT. I paid so much VAT. I paid so much for the camera. And then how did I pay? I paid by cash or Visa or whatever. And maybe even where I bought the camera. I may need that information for later. So just information that is relevant to you, relevant to your business. So start today if you're having that. I think the other point is, what did you say? How do you start establishing this? You start where you are. So if you're small, if you are, most of us, I think, have Excel or on their machines for whatever reason you have the Excel or whatever other app you have. Start there. The big thing is that first create the data. First create the data before you can start having those insights. Yeah. So if the challenge right now, you can't have insights because maybe your sales are recorded in a book. Now, by the time you figure out which was last year, this year, what was the budget, it's all a mess. So start, if you have Excel, very simple. One, the same way I showed you on the tables. So record sale, for catering, all that, as much detail as you can put in. And then now summarize your data. Summarize your data. Then get insights out of it. Get insights out of it. Have you said, can you speak about how to categorize and separate personal and business costs and accounts? If you're very small right now and all your expenses are sort of all together and you're not able to, again, on Excel, do that. For instance, like for my coaching business, because it's not big right now, I track it within my own personal expenses. But what do? I put a note as in one of the cells against, let's say I incur Wi-Fi costs because of my coaching business. I'll come and write, I have paid Zuku 4,000 shillings. I paid on 4th of May. I paid via M-Pesa. And I incurred M-Pesa costs of 34 shillings. And what else do I want to note? And I want to note that this cost is not my personal cost, that this cost is my coaching. So I write there coaching. So at the end of the month, I can see what I spent on groceries. I can see what I spent on all these things, but I can also see how much I spent on coaching. So if I want to analyze my coaching business costs and then incomes, I just go to my Excel spreadsheets, isolate what is saying coaching, and each month, and I can quickly tell this is the trend. This is the trend. How would you know how much to pay yourself from the business as a startup? Well, I think that's dependent on your business as an entrepreneur. So let's say you are making, I don't know, 25,000, and all the other costs that you have put in are 24,000. So you can't now come and say, I have paid myself 30,000 because there's no even 30,000 to pay you. You probably want to start with paying yourself 500 and then you build up from that. I think you will determine, a business can only pay what it has. There is no business then that's why they do retrenchments, because the business is no longer able to pay the people it has recruited. So pay yourself in a way that is aligned to what you're generating. So don't overpay yourself. Yeah, so I think that's my conclusion from there. So I think if there are any questions, maybe you can come off mute and sort of ask your question, or you can just put it again. Somebody is asking how about costs that are mixed, personal, business, like electricity, airtime? How can this be categorized, especially those when you're about to file taxes? It's about usage. So usage again. So let's say like where you have, I don't know, you spend maybe, I don't know, a third of your calls go to business and the other is personal, then a third is what you want to charge to the business. You want to give your business a chance to grow, so don't overcharge it. With one day it will pay you lavishly, but for now, just charge it what it can cope with. Yeah. Right. So if there are no, so I wanted to share some homework, something I want you to go home and possibly think about. Let me just reshare my screen. So I don't know if you can see the screen. So if you're not already doing this, create a way to keep your documents. If you're not, I mean, even if it's like a box, it's better to throw them somewhere in a box and have no documents. Don't throw them in the trash can. Keep them somewhere, even if it's a box for now. Go keep them somewhere. Then record them as soon as they happen, or within reasonable time. Record your transactions in an orderly fashion, like I have said. Capture them for what they are. Then if you're not already doing that, you can also consider identify a key insight from your sales or costs that has happened in the last 3 months, depending on what your cycle of sales is. You can maybe use the last month, or if your sales are very frequent, or you can use the last 3 months, or you can use the last year. It just depends on the frequency of your business. So look at that data and develop a key insight. Tell yourself, is the business growing? Is it declining? And then ask yourself, so what, or why? Why and so what? And so what? And then create, if you've done the first 3 and you could attempt this, create a policy for one of your key processes. For instance, how do you go about making your product? Or how do you go about, how do you go about placing your products in stores? Let's say you're a cosmetic business. How do you go about doing that? So create a little policy that would guide anyone that joins your business. And if you feel that maybe that homework is, you've already covered all those, maybe you could identify key risks. I would actually say this would be for anyone, even if you've accomplished the rest or you have not. Identify key risks that are facing your business. Identify key risks that are facing your business, and what are you going to do about them? Yeah, you're the business owner or a key person in that business. What are your risks? And just 2 or 3 mega risks that are big for you. And what are you going? They may actually, by reviewing a risk, you could identify an opportunity. Because maybe, let's say, you might say there's a risk that our sales may, let's say, like the newspaper situation I was giving, our sales will go down because people are no longer reading printed material. Then you will say to yourself, yeah, that's a risk. And the mitigation to that risk is that I'm going to launch an online business, an online portal for information, and charge for that information. So the risk has brought an opportunity. So again, that's the homework. So let me see whether I have, yeah, if you'd like to reach out to me, there is my email address. Somebody is saying here they have done 3 out of 5. The last 2, not so well. How does one go about annual financial planning? And how do you manage the plan throughout the year? So annual financial planning, you typically want to do it very early, because you're trying to do planning for the next 12 months. I mean, now we're in 2021. You want to do your plan, say, for 2022, right? What is my plan? What do I plan to sell in 2022? We are in May, we are just ending May. So if you have some data already, some records, like the person already saying they're doing some good job on keeping those records. So you already have that information. So analyze that information, because it could be your starting point. So again, back to the catering business, you will say, for catering business, generally the trend the last 2-3 years has been, when there was no COVID, and when there is COVID, it's been like this. We have now launched maybe home deliveries, like I was intimating, and how we are seeing, if we put in this much marketing, this much push online and offline, we are likely to get sales of X. So you may come up with a figure, but in all reality, your business may also be seasonal. So typically people don't need a lot of catering activities in January or February. They probably need them a lot in April and so on. Then you align those sales in that order. So you have predetermined that number one, you want to grow. So your strategy is that I want to grow my sales in catering. So the next question is how? And the how is dependent on the environment, dependent on seasons, dependent on so many other things, customer behavior. So you analyze that, because you're the person in the business. You say, okay, given the way the customers are going and so on, I think I can develop a new customer segment in schools. I'm just giving an example. So in schools, so I'm gonna call on 5 schools that I can deliver cooked meals to every week, I don't know, every day. Then you put that in your plan. And then now you go, you then say, okay, this of course will need some costs will come into this. You say, okay, so what are the costs of serving these new schools? Okay. So you put that in. So you have your traditional business. You have the one you're growing, which is now, say, schools. You have the one that's growing a little bit, that is home-based, home deliveries. Then you have a totally new line, which is you're going to do schools, deliveries to schools, or cooking for schools. So you are going to grow your business. This is how. So it is your strategy. Your strategy now, start putting it down in numbers. So for schools, maybe they won't pay as much per plate as you would say home deliveries. Again, that plate for the schools, how much are you charging and what goes into that? Then you work that out and then prorate that to relevant months. put it in the relevant months, and then sum it up. You will have your expected sales, you will have your expected costs, and your expected profit from that. So that's how you go about doing your annual plan. I tell you, it's not very different even in big organizations. It's just that it's a bit more intense and you have more systems to handle it. But it can be done on Excel, just the way I'm saying it. What systems or program other than Excel can a business use to keep track of sales and expenses? I think I'm not a systems person, but I think many people use QuickBooks. Other people use Sage. If you're a bit bigger, you might use maybe Oracle or others. Of course, these cost money. Systems cost money. So if you're not already at that level, you want to keep it small until you are at a level where your profits can actually buy you a system. Yeah. All right. So if there are no further questions, I think I have tried to answer most of the ones that were put to me. I am really, I'm excited about this opportunity to just share some of my skills and my knowledge. If you're interested to have further conversation, my email has been shared. Please reach out. If you're interested in business coaching, you can also reach out to us. We don't charge very much. Yeah. And if you're interested, maybe some of you are working as well and need career coaching and you're wondering, okay, why is my career stuck? Can I get it off the ground and so on? So again, we can also have some conversations. So reach out on the email that was shared. And thank you very much for your time. Thank you. Somebody is saying for a small business, you can consider FreshBooks or Zoho. Yeah, there's FreshBooks or Zoho. Thank you. All right, back to you, Kayana. I don't know who is.
Thank you very much, Purity, for that session. For everyone, the recording will be available on our YouTube channel, I would say tomorrow. And also Purity will be able to share the slides and the homework. So you can email info@kayana.org to receive the slides that Purity has been sharing throughout the session. Yeah. Thank you very much and have a good weekend.
Thank you. Thank you. Thank you. I like somebody's inspired to start. Thank you and have a lovely day. Bye.